Hey everyone, welcome back to Corporate Decoder, the place where let's just say sometimes executive compensation goes from 0 to 60 faster than a rocket launch. Today we are diving into an 8K filing from T3 Defense Incorporated, and this one is a bit of a story about leadership and a whole lot of money moving around. It looks like they've got a new deal for their top executive that's worth potentially millions. Let's unpack what this really means for the company and its shareholders. And before we jump in, make sure you are subscribed and check out our Discord community linked in the description below for more insider conversations. Alright, so this is a Form 8K, which for those who don't know is a report companies have to file when something significant happens. Think of it as that moment when the company announces a big shakeup or a major development. The date here is the 17th of February 2026, and it's all about changes in leadership and how they are being compensated. First off, let's touch on what T3 Defense actually does. Looking at their registered securities, they have common stock and warrants. The common stock is basically the regular ownership shares of the company, and the warrants are like options to buy those shares later at a set price. And these are traded on the Nasdaq Stock Market LLC under the ticker symbol DFNS for the common stock and DFNSW for the warrants. Now, T3 Defense is calling itself an emerging growth company. This is important because it means they get to follow some lighter regulatory rules for a certain period. They've also elected not to use the extended transition period for new accounting standards, which suggests they are on a faster track to adopt current accounting practices. The meat of this report is in item 5.02. This section deals with changes in directors, officers, and their pay. And boy, is there a change here on the 17th of February 2026. The board of directors, with the okay from their compensation committee, approved a new consulting agreement. This agreement is with a company called Bilio Limited, based in Israel, and it's essentially bringing Menachem Shalom on board as the principal executive officer, which is a fancy way of saying the chief executive officer. This new agreement replaces a few older ones, including a previous consulting agreement with Bilio Limited, a management services agreement involving Star 26 Capital Inc., and 01 Capital LLC, where Mr. Shalom is a key figure, and another management services agreement between 01 and B. Roman Agencies Limited. It seems like they are consolidating and upgrading the structure around Mr. Shalom's role. The company states that because of the company's performance over the last 15 months, they felt it was in the best interest of the company to offer Mr. Shalom an improved consulting agreement with increased compensation. The compensation committee and the board also decided to give Mr. Shalom a cash bonus of $250,000 for his past work. They specifically mentioned that under Mr. Shalom's guidance, the company has made several acquisitions in the past 15 months, naming Star 26, Tilton Software Engineering, Nimbus Drones, and its. This is a big signal that they attribute growth and M&A activity to his leadership. Let's talk about the pay. This new consulting agreement is effective retroactively from the 1st of January 2026. Mr. Shalom will continue as Chief Executive Officer. His base salary will be $60,000 per month. On top of that, he has the potential to earn target cash bonuses equal to 50% of his base salary, depending on performance goals that the compensation committee will set. He could also get more bonuses based on achieving specific milestones that the board decides on. Then there are the stock grants. Mr. Shalom will receive 250,000 shares of common stock every quarter. This is subject to the availability under approved incentive plans. If there isn't a plan or no shares are available, these shares will accrue, meaning they will stack up until there is a plan, and shares can be issued. It's important to note that any such stock plan will need shareholder approval because of Nasdaq rules. There is also a relocation grant of $175,000 if Mr. Shalom moves to the United States with his family. On top of all this, he will get the standard executive benefits like health insurance, a 400 wonk plan, and 30 business days of vacation per year. That's a lot of perks in compensation. Now, let's look at what happens if things go south. If Mr. Shalom is terminated for cause, or if his employment ends due to death or disability, he will only be entitled to compensation earned up to that point. However, if the company terminates him without cause, he gets 6 months of his base compensation. If he decides to resign, he will be entitled to compensation for 12 months, and if he is terminated for cause, he gets nothing. This severance package is fairly standard, but the 12 months if he resigns is quite generous. The agreement also includes standard clauses like non-competition, non-solicitation, and confidentiality. These are to protect the company's interests after he leaves. This whole description of the consulting agreement is basically a summary, and the actual agreement is attached as Exhibit 10.51. Now, on to item 9.01, which is about financial statements and exhibits. For this report, the key exhibit is number 10.51, which is the consulting agreement we just discussed. They also have Exhibit 104, which is the cover page interactive data file embedded in the document. And finally, the signature. This report is signed by Menachem Shalom himself as Chief Executive Officer, with the date of the report being the 20th of February 2026. So, what is my take on all of this? Well, T3 Defense is clearly betting heavily on Menachem Shalom, the significant compensation package, including a substantial salary, potential bonuses, and stock grants, signals a strong belief in his ability to drive the company forward. The retroactive effective date for the agreement is a bit unusual, but it aligns with the company's stated performance over the last year, especially with those acquisitions. This level of compensation for a CEO of an emerging growth company is quite high. It raises questions about the company's existing financial health and its strategy for growth. Are these acquisitions truly generating value, or is the company relying heavily on external factors and executive leadership to stay afloat? The generous stock grants, while potentially motivating, also dilute ownership for existing shareholders. The mention of shareholder approval for stock plans is good, as it ensures transparency. The severance package is also structured to incentivize good behavior from both sides. For investors, the key will be watching if the company can deliver on the growth promised, and if these acquisitions translate into sustainable profits. The risks here include the potential for overpaying for acquisitions or failing to integrate them effectively, which could strain the company's finances, especially with Mr. Shalom's substantial compensation tied to performance. In conclusion, T3 Defense Inc. is making a significant investment in its leadership. The success of this strategy will hinge on Mr. Shalom's ability to continue delivering results. Particularly in driving growth and managing the company's expanding portfolio through acquisitions, it's a high-stakes, high-reward situation. Alright, that is our breakdown of T3 Defense's latest filing. What's your take on these compensation numbers and what they signal for the company's future? Drop your thoughts in the comments below if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description for extended discussions. Thanks for watching. See you next time.